We have Will Clemente joining us. Will, how are you, buddy?
I'm good, brother. How are you?
I'm doing fantastic. Today's an exciting day. Bitcoin hitting 45,000. I saw you tweeting up a storm, all kinds of different thoughts. How are you feeling about sentiment in on Twitter and kind of in the market in general?
I'm good. It's pretty mixed. I feel like some people are still kind of in disbelief, but you do have a few people in the timeline who are kind of euphoric. So I don't know. Seems like a good kind of mix here. I mean, general vibe does kind of feel like disbelief, though.
Hey, what bears have to remember is that you can be bearish at certain points and you may make a little bit of money, but ultimately you're picking up pennies in front of the steamroller. This is a decades-long trend and we only going up. And so
Bears win the battle, bulls win the war. So
facts. Facts.
Like
Will, you should be on a plaque somewhere for saying that. That's a great, great thing. All right, talk to us about some of these charts you got. First is you've got the this price chart. And you got a whole bunch of different levels, green and red, that are outlined here. What is this showing us?
Yeah, as you just said, these are basically just price levels I drew out. I think the kind of main point I wanted to just get across here was just saying that I think at this point we're kind of right below major resistance. And so from like a short-term kind of trading perspective, I don't think the RR here being, like giga long is great until we clear that resistance. You never want to buy right below resistance. You never want to sell, right before we hit major support. And so just from that perspective, as we're kind of pressing up against that major resistance, if I was a short-term trader and I wasn't already long, I would kind of just, wait out to see what the reaction here is at this level. But nonetheless, again, we're approaching this, major resistance level, both kind of in this consolidation pattern that we've been in, as well as just, horizontal price structure going back over the last year or so, which is right around 46, 47K. That's also around the yearly open. There's a few different moving averages over there as well. But that's kind of as I feel like we've been talking about for several weeks or whatever, that's kind of a key level that I've been watching. And then another kind of, I have two other ways you can look at confluence with this in addition to everything I just said. The first one is the next chart, which is short-term holder cost basis. So we talked about this last week, so I don't want to repeat myself too much. But essentially, this is the aggregated cost basis of all market participants that have been in the market for less than 155 days or less than 5 months. And right now, this kind of aggregated cost basis sits at 46,200. It does kind of move around a bit, week to week whenever we speak, but generally it's been hanging out around 46 to 47K. As of today, it's sitting at 46,200. And then last kind of thing that I wanted to point out on the confluence of 46 to 47K being kind of an important level is the third chart. The third chart is looking at basically a heat map of all the bids and asks across different venues. In particular, in this chart, we're looking at Bitfinex. The reason we're looking at Bitfinex has a higher hit rate than most of the other venues. If not, they have the highest hit rate. Kind of back testing, looking at all of the kind of, quote unquote, walls that they set on the both bid and ask side. Generally speaking, Bitfinex tends to kind of be the smart money in a sense. And whenever they kind of, place either a buy or sell wall, that tends to have some dictation on future price movement. And so what we see currently is that they had just actually in the last hour or so kind of set this ask wall between 45 and 48K. So that's confluence as well. You're seeing some large asks step in from Bitfinex in particular. What you don't want to see is like a partial fill. So this seems kind of counterintuitive. Like what you want to see for bulls in this scenario, because we're talking about an ask wall, you want to actually see it fully get filled, see all their orders get filled. And conversely, if it was a bid wall, what bears would want to see is, full fill of the bid wall. The reason is because the market basically moves in two ways. It moves because of, effort and absorption. So effort being active orders that are stepping in, right? So when you just go on, whatever venue you're using to allocate to Bitcoin, you just market buy, right? You're buying at the market price. It's like if you go on eBay, right? And you hit buy it now, right? You're willing to maybe pay a little bit higher of a premium just to go ahead and get the exposure and lock in your purchase, right? And then there's limit orders, and limit orders are essentially saying, and I like to use this eBay analogy because I think it makes somewhat of sense. You go on eBay, something's listed for $50. You don't want to pay $50. You say, well, I don't deem that fair value for this item, but I'll step in and place a bid at, $40. If it fills, great. That's where I think this is, worth my, purchasing power. If not, then that's cool. It didn't reach what I think is fair value. It's the same thing in the order book for Bitcoin, right? And so people come in and they set limit orders, both on the bid and ask side. And so whenever you see, a clump of bids or asks or wall, whenever you see that fully fill, that means that the effort in the market is outweighing the absorption. So in this case, if we see this ask wall get fully filled, to me, what that's indicating is that the effort or the active orders is outpacing the amount of absorption or this wall of asks that we're looking at now, or limit orders that we're looking at now. So that's what I would be looking at. Kind of the bearish scenario would be these bids fill like 60, 70%, and then price reverses, because at that point it's showing you that the amount of effort in the market couldn't outpace the amount of absorption that was set out, if that makes sense. But yeah, aside from everything I just said, specifically talking about the order books, across the board, looking at order books, on-chain, and technical analysis, all three are showing that the kind of 46, 47K area is an important level for BTC. And so when you talk about kind of, this other framework that we've been talking about is kind of, there's value buyers and momentum buyers, right? And so I think for a lot of those kind of momentum market participants or trend following strategies, a lot of those will kind of trigger if we can get above that area.
So when you start to look at this, it's obvious that area is really, really important, right, in the spot market. I saw you tweeting this morning about the open interest just violently spiking upwards. And we've got the chart here for that as well. First, explain, like, when we see these massive movements up in open interest, what is that telling us is happening? And then how do you evaluate this in comparison to some of the spot stuff you were just talking about?
Sure. So open interest is just telling you the number of contracts that are open. So that's where open interest by definition is telling you how much futures, how much interest is there from the futures market, in being active in Bitcoin. And so, a lot of times, like when I post this, people will automatically think that when I'm saying open interest is up, that it's bearish. It's not necessarily the case. I mean, most of the times that we've spiked up into the zone in the chart has been bearish. But all open interest rising is telling you is that there's a large amount of contracts coming into the market, right? And so that could be aggressive longs or shorts. So with that being said, again, all this is telling you is that there's a large amount of or buildup of contracts in the system, but we need to look at other things to kind of, give us hints as to the aggression of the positioning, because there's always a long for every short. Sorry, Cody's deciding to eat my chair. There's always a long for every short. It's all about kind of gauging what's the aggression of the market participants on both sides of the contract, right? So the example that I always like to use is, for example, you have one contract, you could have like a, degenerate on the long side that just wants leveraged long exposure. But on the short side of that contract, you could have a market maker who's taking the short side of the contract, but they might be, delta hedged by being long spot. So they're, long spot, and then they're short the perp contract. So, it's all about kind of gauging what's the risk profile of all the different market participants that are making up that open interest. And we can look at the two charts after this to kind of gauge that positioning. Not only can we do that, but we can also look at in real time, aside from kind of, what I just said, we're going to look at the next two charts. That's kind of somewhat of a predictive approach as to kind of trying to gauge the open interest. The other thing we can do is look at, how is the open interest behaving? And that can kind of in real time give us more clues. So what do I mean by this? Like if, as we talked about, 46K, really important price level. If the price starts to, wick above that, and, open interest is kind of, just flat or increasing, and you don't see any kind of wipeout in open interest, then that probably is indicating to you that a lot of that buildup hasn't been aggressive shorts, right? And you know, conversely, if we start pushing above that price level, you start to see OI kind of, you know, spike down on pushes up. That's showing you that, you know, shorts are getting forced to close above that price level. So I would say, you know, you can look at the next two charts that we're about to look at. The other thing you can simply do is just, you know, sit out for a second, wait, see how is open interest reacting with the price level, and then kind of, you know, gauge your thesis from there. But with that, we'll look at, from a more predictive standpoint, two charts to kind of gauge in a, you know, predictive sense, what do we think that, you know, how do we think that open interest is positioned? So first we'll look at the spot. Go ahead. My bad.
No, I was going to say, so the spot premium. Explain what's going on here with this first of the two charts.
Yeah. So on the bottom, you'll see perpetuals basis. This is comparing the aggregated spot price versus the aggregated perp price. And so whenever the indicator is green, so you'll see whenever it, like, you know, flips negative, that's just telling you that the, you know, spot is trading at a premium to perps. And then conversely, whenever it's gray or whenever it's positive, that's showing you that perps are trading at a premium to spot, or in other words, spot is trading at a discount to perps. And so we've been in a pretty prolonged regime of spot premium over 3 months now, which I'd have to go back and double check on this, but I'm like 90% confident this is one of the longest spot premium regimes that we've ever seen in Bitcoin's trading history. So that's one thing. The second thing is the chart after that, which is the annualized rolling basis, the 3-month basis, or in other words, you know, quarterlies, which I've been calling it in the newsletter. You know, essentially this is the difference between the current spot price and the 3-month futures contract. So you can buy spot and you can sell the future, capture the difference when the market's in contango. So what I did here was I took that basis and then I adjusted it for inflation. So for CPI inflation, of course, you know, if we want to get really nuanced, I don't think CPI is the proper gauge of inflation, but nonetheless, adjusting for CPI inflation, the, you know, 3-month basis is currently in backwardation. And so it's currently at like negative 2.5%, or I know it's negative 2 point something and some change. I posted it last night, the exact decimal point, if you want to check. It's just shy of negative 3%. But this current regime of negative basis has lasted 65 days compared to the 35-day regime that we saw during last summer. And so to me, this combined with the regime of spot premium that we've been in is showing to me overall that we've just kind of got this healthy kind of derivatives greed reset, quote, if you will. And you know, in general, you're kind of seeing a lot of that exuberance that's kind of cooled off from the derivatives market.
So when you start to think about this, it feels like we're watching a lot of the, I'll call it more kind of macro data points point towards Bitcoin. We were joking earlier that everyone in the mainstream media seems to be like, why is Bitcoin not going up? It, you know, there are geopolitical instability, inflation. It's like, well, like Bitcoin's up, you know, about 30% or so since Russia invaded Ukraine. And it just feels like the volatility sometimes masks these types of moves. But then if we start to look at the on-chain underlying metrics, and I know you've got a couple of these charts, it feels like, I think you said last week, like there is this laying out of a scenario where once a catalyst happens, it will ignite based on this illiquidity in the supply. Is that kind of still how you're thinking about this?
Yeah, exactly. You know, the way Lynn Alden's put it is basically, you know, we've got the fuel laid out, but we need the spark, right? And so the two charts that we're about to look at are kind of visualizing that. The first one is the long-term holder accumulation ratio. This is created by Checkmate, who's the lead analyst at Glassnode, as well as David Puel from ARK Invest. We had David on the podcast this week, so I'm looking forward to that episode dropping. But this metric essentially compares the rate of growth in long-term holder supply to the rate of increase in Bitcoin supply issuance. And so whenever this metric is significantly trending down, whenever it's below zero, it's showing you that the amount of long-term holder accumulation is outpacing Bitcoin supply issuance. So in other words, it's got this deflationary aspect to it because more supply is getting locked up than is coming into circulation. And so currently by that measure, Bitcoin supply, based off of this specific measure, is currently at the most deflationary level that it's ever been in its trading history. So in other words, it's showing you the long-term holders are locking up a supply at a pace that's outpacing Bitcoin's issuance to an extent that's never occurred before in the Bitcoin market.
Yeah, it's incredible to see this, man. It feels like we're just seeing this all play out all over again from the summer of 2021. When we look at the illiquid supply shock, we can literally see that is what was happening. Talk through this a little bit.
Yeah, so very similar to summer, except this divergence is now, I double checked after we talked about it last week. It's now confirmed it's the largest divergence that we've seen from this specific measure in Bitcoin's history. This is the specific metric I created back at the beginning of last summer, in like May or June of last summer. It's comparing the amount of supply held by illiquid entities, who are entities who sell less than 25% of the coins they take in, to highly liquid and liquid entities. So in other words, it's a ratio of weak to strong hands. Whenever the ratio is ticking up, that means supply is moving towards entities to sell less than 25% of the coins that they take in. At the same time, this also adjusts for the increasing amount of supply. So one of the questions that I would often get about a liquid supply before I created the ratio was, well, isn't this naturally going to go up as supply comes into circulation? But this metric actually adjusts for that, because it's telling you the relative amount compared to highly liquid and liquid supply. So it's telling you at all times, no matter how much supply there is, what's the relative holdings between those two cohorts. And so, as you just mentioned, seeing this tick up over the last 2 weeks is obviously a good sign. But in general, we've just seen this massive divergence over the last 3 months, really, of supply continually getting locked up by these entities who have a low historical tendency to sell. Conversely to, what people will often refute about exchange balances dropping, right? The argument there is always, well, exchange balances are going down, but people can just move the coins right back to exchanges in 10 minutes. And technically, yes, that's true. But with illiquid supply, it's literally telling you the historical tendency for every on-chain entity to sell their coins. It looks at, based off of heuristics on my wallet, what's the amount of, BTC that I'm taking in and selling. And so, by definition, aside from what that argument is about exchange balances, this is literally telling you the likelihood of those coins coming back onto the market, right? And so in confluence with long-term holder supply, this again is showing you just that supply is getting locked up. And I also think it's really interesting to note kind of the difference between now and late 2018. In 2018, a liquid supply dropping pretty much marked the 2017 top and continued to decline all the way through into the bottom of the bear market. And so, that's another kind of, difference between now and then, and kind of the underlying supply dynamics from an on-chain perspective.
What about whales? What are they doing?
Yeah, so the next chart, we're looking at the, essentially what I did was I took all the, large whale balances, quote unquote. It's all the entities who have over 1,000 BTC. And then I filtered out all kind of the known on-chain entities that Glassnode and specific heuristics track. So, GBTC, the Purpose ETF, QBTC, all the OTC desks that Glassnode tracks, some of these different entities that they, have heuristics on and, have actually labeled. And so then, you filter that out and you get what I, call quote unquote filtered whale balances. And that's that green line. As you can see, whales bought, all the way into, the beginning of 2021. A lot of that was, the GBTC arbitrage, as well as the cash and carry trade that drew a lot of capital into spot. You saw whales holdings rise really substantially, and then they distributed into that whole kind of, topping period from end of, February into the beginning of May. They started reaccumulating at the bottom of the summer. We talked about that here on the show. I remember that initial pop there at the end of July, like it was yesterday. And then they started distributing into the end of the year last year. Over the last month or so, we've seen some interesting behavior. You saw them kind of buy the bottom at 33, 34K. distributed back into this consolidation. And then over the last week or so, you started to see their holdings tick up a bit. I'm curious if any of that is Doquan, but we've seen their holdings uptick a little bit over the last few days. But still, when you zoom out, I mean, we're still in a downtrend from September of last year in terms of their holdings. But conversely, though, what you do see is that the smaller guys have been stacking really aggressively. And so that's that orange line. In specific, I just pulled up the entities with 1 to 10 BTC. And so what you see is that, their holdings over the last month or two have really just kind of aggressively moved up, roughly offsetting some of the selling that we've seen from whales over that same time period. So obviously you'll note the divergence between, it seems like the smaller guys have been buying from, looking on chain, and the whales have kind of been distributing over the last month or two, which is this kind of interesting divergence, which of course isn't ideal, right? Because, generally speaking, retail doesn't outsmart large buyers. But if we look over summer, you'll see a very similar kind of signature, right? Because the smaller guys were actually stacking through all of summer. They sold from January 2021 all the way to May 2021. And then they bought from the bottom in May 2021 all the way until the end of the year. And they actually front ran all of the whales buying at the end of July. And so you can see that they're like kind of smack dab in the middle of the chart during the summer range of last year. So it's just something to keep in mind, although ideally, what we do want to see is starting to see some of those, the whale balances start to tick up substantially again and kind of break us out of this downtrend in their holdings that we've been in since last September.
All right. Now, I got one question for you, then Joe's going to ask you some questions. Do Kwon says he's going to buy $10 billion worth of Bitcoin. He's got $3 billion in dry powder, and he's starting to buy. He's buying 100 million or so a day, it seems. How much of the recent 10, 12% increase in price is just him buying versus other things?
Yeah, it's an interesting question, right? Because the way he's kind of bought is he's like basically told the whole market that he's going to buy. And I tweeted like a week or two ago, I was like, are we just going to ignore the fact that Doquan's about to buy like $1 billion plus of BTC? And then everyone's like, no, it's priced in. And of course, over the last week, it wasn't priced in. But yeah, I think like the question is, how much of the price increase has solely just been people front running him, right? And people knowing that there's just a steady, bid, a steady TWAP over the last week, right? And then the second question is, will he be able to initiate momentum in the market? And so what I mean by that is, I think Saylor, for example, at the end of 2020, I think he played a large role in kind of initiating some of that momentum, not only just because of the corporate treasury announcement, which in itself was good for Bitcoin's narrative as kind of that whole the inflation hedge narrative that really propelled us into the end of 2020, but solely just from a supply demand aspect, because he took a large portion of supply off the market, locked up a large portion of supply. And so in my opinion, that kind of initiated or helped initiate some of that momentum, as not only you have people front running you, but you're steadily kind of placing this bid into the market that's helping it drive higher. So I'm curious, will his bid that isn't he's not finished yet, will that be able to push us over some of these kind of momentum thresholds, trigger some of these trend following market participants, momentum stuff? Will he be able to trigger that? Or will we just see as soon as he's done buying, will we just come right back down, right? Are people just saying, all right, I'm just going to step out of his way, let him finish his buys, and then we'll just, continue on down? We'll see. I mean, we have, the way I would approach that question would just be to say, set some definitive levels. We're looking at momentum to get reclaimed. We've talked about some of those things at the beginning. And then just, look at this in kind of an if-then format. If it reclaims, okay, then I guess he did initiate some of that momentum. If not, then no. So that's kind of the way I'm seeing it. I'm curious if we'll see that kind of follow through once he's done. Hey, Pom, can we look at this? I just want to look for 10 seconds. I just want to show this one last chart. I think it's interesting for people to note. Just real quick. It's the last one. It's the US trading hours. So I think this is interesting for people to note, because when you look at throughout Bitcoin's history, Asia's really dominated the market.
Correct.
And you saw that even into like the end of 2020 into kind of early 2021. But since the end of May, we're talking about like the different types of buyers. We just talked about kind of the size of the buyers and that whole kind of thing. We talked about the kind of the spending history. When we're talking about where the buyer's coming from, it's really interesting to see U.S. trading hours when you compare them to other, trading sessions and trading hours and the price premium during those trading hours. We've seen over the last year or so, it's 10 months as of today, the U.S. trading hours have traded at a premium, and that's kind of increasingly happening. So I think that's, I just wanted to say real quick that I think that's interesting that, you're starting to see some increasing interest in Bitcoin from the United States during U.S. trading hours.
It's super, super interesting. And I think that this is the type of stuff that, one, kudos to you for, seeing a lot of this stuff, but also two, I think this is the intellectual curiosity that people have as you can start to understand kind of how this stuff is playing out, and it's ever changing, right? It's not like the stock market that's been around forever and there's not that much changing. Joe, what questions you got?
Yeah, I was going to actually ask about that because I saw your tweet this morning and I thought that was interesting. My other question, though, would be around some of the stuff we've seen in the news. I feel like we've talked about this before, but I would love to just get a better understanding about how you think about some of these large corporations and entities buying Bitcoin and how you tell that from the data, right? So we've seen not necessarily buying maybe, but BlackRock, right? They've been in the news that they are very interested in serving their clients with Bitcoin. Goldman Sachs, I think you posted on Twitter the front page of their website, which was very funny. But how do you think about it from an on-chain perspective? Are there specific things that you look at and you say, hey, this is what needs to change to realize that some of these big players are actually in the game now?
Well, I think like the obvious thing would just be looking at whales balances, right? And if you start to see those, large buyers, not only in their holdings, but also the number of whales stepping in, that's what we saw at the end of 2020. We saw like unprecedented growth in the number of whales as well as their holdings. So that would be kind of the biggest telltale sign. The other kind of, thought experiment I've gone through with what you just kind of described is when we have these entities coming in, are they looking to, actively allocate to liquid tokens? Obviously Bitcoin being the main thing, but, whether you like other coins or not, I mean, these traditional finance people are interested in DeFi and all these different kinds of things. I'm curious, will you see kind of liquid token investing, or are they solely just looking to get involved with kind of infrastructure around the asset class, right? Basically kind of the, when there's a was it gold rush, you want to be selling shovels, right? And so like, will we see Goldman, for example, will they just be looking to get involved with building out like OTC desks or like execution arms and infrastructure for large clients? And will they focus on that, or will they actually do some kind of, liquid token investing? That's the question that I don't really have an answer to. I've asked some of my buddies who have a little bit of like TradFi background. They seem to kind of lean towards they're probably just more interested in getting involved in the infrastructure around the asset class. But I guess the only way to really tell is, I guess, with time. But from an on-chain perspective, to like fully answer your question, it would just be some of that, the whale stuff that I described would be kind of the obvious thing.
You liked Goldman Sachs website?
Yeah, I thought it was cool. I thought it was cool to see the space, get attention. Didn't mention Bitcoin though. It's just kind of the whole digital asset metaverse. That's kind of what it seemed like they were interested in. But everybody's got to start somewhere. Get them down the funnel, right? So
I like it.
Well, when you think about what we're watching play out here, if Do Kwon is successful in backing UST with Bitcoin, do you think we could see a bunch of other stable coins and maybe even central banks kind of follow the playbook, and that just is like a, I don't know, multi-year, buy trend that they have to buy the Bitcoin in order to back their assets?
Sure. So first of all, I really liked your interview with Do Kwon. I took Cody on a walk this morning, and I was listening to it. It was like 2 hours ago, actually. So I like the last question you asked, which is basically like along the same premise of what you just said. And his answer was yes. And I kind of agree with him in that he's basically kind of setting the playbook for, other protocols and just other entities in general to back currencies with Bitcoin as a reserve asset. Although Bitcoiners, don't love Luna as, being another, blockchain, right? At the same time, I think Bitcoiners aren't, fully appreciating the kind of gravity of in real time, we're seeing a currency, albeit maybe not the one that they would love to see. We're seeing a currency being backed with Bitcoin as the pristine collateral that it is. And so I think it's a genius move by Do Kwon. And I do think that over time, once Bitcoin's liquidity grows, you can't back the US dollar with Bitcoin quite yet. But I think over time you'll see more currencies be at least partially backed by Bitcoin. Maybe over time we start to see something like a part gold, part Bitcoin backing at first, or peg, I should say, at first, and then maybe over time that pivots to solely Bitcoin. We'll see. But I do think this is kind of an interesting, it's kind of 0 to 1 event in terms of currencies being back with BTC. Very similar to kind of like, the Sailor immaculate conception of corporate treasury announcements. I think, or the El Salvador, nation state adoption. Like, I think this is up there with those types of events in terms of significance for Bitcoin's adoption moving forward.
I completely agree. I think there's a lot of reasons why people may not like it, but I actually think this is incredibly bullish. And after having talked to him, like, he's a Bitcoiner, right? He understands. Yeah. He gets exactly why Bitcoin is valuable, pristine collateral, etc. So it's pretty cool. Exactly. Before we let you
go,
he's
not competing with Bitcoin. He sees it as additive, and that's, I think,
correct.
Although like, full disclosure, I don't own any Luna, but I think some of the Bitcoin people maybe should realize, like, they, like, Do Kwon sees Bitcoin in the same lens they do, and he's trying to make it an additive thing because he understands the value proposition of Bitcoin as that pristine collateral in the same way that they do. So,
correct. Before we let you go, tell us about the podcast and the interview you got coming out.
Oh, sure. Thanks for the plug. I'm having on Yassine Alamandra and David Quell from ARK Invest this week on the pod. So it should be out sometime tomorrow. We talk about all things on-chain derivatives. They're doing some cool stuff. They've got a lot of research coming out, new cool stuff, and they've got a couple of metrics that they created. So we kind of ran through that, including the long-term holder accumulation ratio that we talked about earlier in this conversation. So should be a fun one. But if you're interested, hop over on Blockware Intelligence. That's our YouTube channel. So
awesome, man. All right. Well, everyone feels better when it's green, not red. Seems like price is going up at the most basic levels. So we'll keep watching, and we'll talk again next week. But I appreciate you coming on.
All right, brother. You guys have a good weekend. Thanks again.
By the way, he's at 599. He's almost at 600K.
Oh, well, it's
getting close.
Yeah, let's go.
Push him over the edge there, Joe. Maybe if Joe tweets once and tells everyone to go follow you.
That'd be the smart thing to do. If you want some free alpha, go follow Will.
All right, buddy. Sounds good. See you later.
See you, Will.
All right, see you guys.